Hello, this is Doug Gerlach from iClubcentral and my iClub.com. Welcome to our Investment Club webinar. It is Tuesday, November 19th, 2024. Another tax year is soon coming to a close, and that means investment clubs will be addressing the year-end tasks and the upcoming chore of preparing their club's tax returns. And so tonight we're going to be taking a look at conducting the annual investment club audit, an essential part of managing your club's books to ensure accuracy, to find errors before they compound, and to educate your club members on the duties of the treasurer and how investment clubs and investing partnerships operate. So we'll be addressing this. In the past years, we've included the audit in our Closing the Books webinar, but we thought this was really important enough, so we're pulling it out and addressing it in its own standalone session. Next month in December, we will be addressing our annual Closing the Books session, where we'll talk about all the things you need to do as a club treasurer to wrap up for the tax year and get ready to prepare your club's taxes. The audit is not something that you'll need to be addressing until after you have closed out the books, but we wanted to make sure you have the content and are preparing, get your audit committee convened at your next club meeting, and get the plans in place to carry out your club's audit. As always, this is brought to you by My iClub, the world's most popular website for investment club accounting and operations. The Handouts tab in the GoToWebinar application is where you'll find the slides of this presentation, and you'll also find our accounting investment club audit checklist, and that is newly updated and expanded. So our prior version has been in place roughly since 2007, so we have overhauled it, added more detail, updated some of the report titles, provided some more detail and instructions. So we urge you to grab a copy of that from the Handouts tab and get that early release. If you have questions, please feel free to type them into the questions box during the webinar. We have Treva, Russell, and Sean, the dynamic trio in the back office, who will be available to answer your questions as we go, and I'll be monitoring them as well. So when we talk about auditing the investment club's books, what do we really mean? Well, this is an annual review of the club's transactions and records for the year to make sure that everything jives, that all of the values are accurate, that the transactions have been entered correctly, both from a numerical perspective as well as the type of transaction in the club's books. We'll help you look at the accuracy of all of those records, as well as the practices that you might use. A lot of clubs sometimes get a little sloppy, or sometimes are unsure about how to handle certain transactions and make up some procedures that probably aren't the best. And the audit hopefully can help have another set of eyes looking at the records, looking at the transactions, and finding where things could be improved. Even if you are using the monthly reconciliation wizard in My iClub and you're balancing your books each month, it's still imperative that you conduct the audit every year. There are certain types of transactions that may not show up in your monthly account reconciliations, and so you'll want to definitely keep this audit on your radar screen. It's recommended for all investment clubs of all sizes. The advantage when you're a smaller club is that the audit can be pretty straightforward, and it's easy to undertake as you grow in size and complexity. If you've got that backbone and that experience where your members understand the principles and practices, it can make it a lot easier down the road. The worst case scenario, of course, is a club that's never done an audit, but they have all sorts of problems with their records, and they're trying to contact our support team to see what they can do to correct them. And really, it's all on you as the investment club treasurer to figure out where those problems are. So starting up a regular audit practice this year will go a long way down the road to helping future treasurers of your club to make sure that the books are accurate. When we talk about auditing, we're really trying to find those errors. They could be typos, misentered dates, amounts of transactions in many cases. It's often easy to quickly be typing in the date, and instead of typing in 2024 as the year, you type in 2014, for instance, and then you wonder where that transaction is. Then you re-enter it because you can't find it, and you think you didn't enter it, and now you've got a duplicate transaction and an error that is dated a decade ago, but it continues to propagate and cause problems with the unit value accounting system. It could be that the wrong transaction type was entered with that transaction. And this is the issue with unit value accounting, where we're adding units, we're removing units. Members are putting money into the club. They're buying units. Those units are changed their price, hopefully every month, and hopefully growing over the long term. And one little error can compound and become impossible to nearly impossible to find, especially several years down the road, where you might have to sift through hundreds of transactions to find one single transaction where a couple of digits got transposed. So if we can find those in a limited subset of a year's worth of transactions and correct them all, we're doing a great service down the road. And there are actually times where banks and brokerage firms make mistakes, and your statements could show errors in them. We don't automatically assume that when an error is discovered in your club accounting records that it is an error with the software, or it's an error with the user who typed in that value. It could also be that the brokerage has made a mistake, and so contacting them to correct it, if it's material, could be the way to resolve that question. But you'll never know unless you do the audit. Now, even if you're an experienced club treasurer, and I know a lot of you who are here in our webinar have been doing this for a very long time, and you've probably been bestowed with the tiara or the crown of treasurer for life. But even if you are experienced, you should be welcoming that club audit. It's important if you're a new treasurer to have that audit to get some feedback on how you might work more effectively, especially if you've got former treasurers in your club who can provide some assistance. It's also good for you long-serving treasurers to bring others into the audit so that they can learn more about how unit value accounting works, how my iClub works, how to interpret the information on the reports, so that perhaps they can serve as treasurer and take over from you at some point in the future. Another benefit of conducting an audit and making sure your records are accurate is that it can give you confidence that your performance figures, as you see on the club benchmark and performance report, will be accurate. And so that can support the entire club's focus in building a portfolio that will grow over time and help you meet your financial goals. The audit should be completed at the beginning of every new tax year, ideally before the state and federal tax returns are filed. And I'll discuss this a little more in depth because it can be kind of tight depending on when you receive all of your 1099s from your financial institutions. But if you're able to conduct the audit before the tax returns, then you're minimizing the chance that something on the tax return will be significantly wrong, and you'll have to refile that return, file an amended return, which is never a good idea if you can avoid it. If you are holders of the club fidelity bond that's offered through Better Investing, the audit is required for that. You must have the audit done every year, the verification form on file in order for that club fidelity bond insurance coverage to be in force. That fidelity bond is offered through Better Investing once a year. They send out messages to the clubs and offer that fidelity bond. It covers malfeasance, so it is meant to be something to protect typically portfolios of clubs that are much larger. It doesn't protect you from price declines, but it protects you from fraud, essentially. And one of the ways that it does that is ensuring that the club is following good practices, including the audit. So let's take a look and step through how to audit the investment club's books. As I mentioned, our new investment club audit checklist is available there in the handouts tab of the webinar. It'll also be available on the My iClub Club Hub tomorrow and in the My iClub Club file storage. There's a folder there that says free resources from ICLUBcentral that includes our manuals and taxpreneur user guides, etc. And it'll be appearing there tomorrow. Today, we still have the prior version of that checklist in your club file storage, but that will be replaced tomorrow. But if you grab it from the handout tab, you'll have it available now. So in December or early January, I like to think that your December meeting, this is something that you could be getting the volunteers together to create your audit committee. Typically 3 to 5 club members is all you need. The treasurer is not a member of the committee, but they may be available for questions if you're meeting in person, and certainly would be able to answer questions by email or by phone as the committee does its work. Past club treasurers can be very useful members. They probably know the ropes a little bit. They know their way around My iClub a little bit. They may have some recommendations or be able to identify sources of information to make things a little easier for the rest of the committee members. Now, there are two potential timeframes that you could schedule your audit. Usually, rather traditionally, audits were done after the 1099s were received. Those are the forms that your brokerage or financial institution sends that include your dividends, your interest, your capital gains, your buys, your sells for the year, other transactions that are received. Those used to be delivered by January 31st, but in the last decade plus, that deadline was pushed out to February 15th. So at the same time, the IRS changed the filing deadline for partnerships from April 15th to March 15th. So 15 years ago, you had essentially the entire month of February, the entire month of March, and 2 weeks of April. So 10 weeks between when you received the information you needed for your tax return to the date that the tax return must have been filed, or is required to be filed. And now you've got 4 weeks because the filing deadline for partnerships is March 15th. The deadline for brokers to send your 1099 is February 15th, and oftentimes brokers will be later than that. They're penalized when they do it, but sometimes they can't get those 1099s out by the February 15th deadline. So that pushes the time frame for the audit into a very compressed 4-week period. Now, there's nothing to say that you couldn't start the audit using year-end statements and the other portions of it, and then complete it after those 1099s are received. Or you could simply not include the 1099s and work off of year-end statements and the other reports for the year, and essentially have the audit completed by mid-February. A lot of treasurers like to do all the work, get their ducks in a row, so that as soon as they get that last 1099, they can plug it into the club tax module and generate the return and get it out to partners well in advance of that March 15th deadline. So the timing is kind of tricky, and it's up to you to figure out how best to accommodate the various deadlines that you for receiving the information that really should be part of your audit. In the past as well, audits were often done on a Sunday afternoon in some members' kitchen, where the members would sit around with bunches of paper reports that had been printed out, and financial statements and trade confirmations, and they'd go through one by one. Maybe one member would take a month of the broker's statement and go through the transactions, and the other member would make sure that they were showing up in the transaction summary report or something like that. And that worked very well. And that's a a very efficient way of working. Today, as more and more clubs are moving into cyberspace and moving online, and as documents are often not even printed, they're delivered via PDF. Many clubs have moved to an online model where they might meet, using Zoom, for instance, on an afternoon or an evening and go through it, or they might divide up the work and send it off and let everyone work on their section independently and send the results back to the committee chairman, who would consolidate it all and make sure that it's all working. So again, it depends on the style of your club and how your members work and how facile they are with electronic communications, which method really works for you. In an online audit, it's often the case where you would delegate tasks to the various committee members, so that, for instance, you have 3 members on the committee. Each one of them gets 4 months and gets to validate and review all of the transactions in those 4 months. Pretty simple, pretty straightforward. As the clubs get bigger, that becomes more and more of a task. Another way to divide up the tasks might be to have different members take a different section, different type of transaction, like all the cash transactions. So that would be all the expenses, all the miscellaneous income coming in. Another member would review all the security transactions, the buys, the sells, the corporate actions, the dividends, and another would look at all the member transactions and make sure that all the member deposits and payments and fees were recorded properly and nothing was missed. It's I'm sure you can figure out what methods kind of work best for you, work best for your particular club members. Often, somebody who's looking at a 10-person club, who's looking at all the member transactions, that's 120 different transactions for the year, not counting withdrawals, perhaps. And you might have 4 stocks paying dividends, so they're paying 4 dividends a year, and that's 16 dividends. So the balance is not evenly distributed in many cases, but that all depends on how much time each of your committee members can contribute to the whole, and how you choose to divide it up. Be creative, but just make sure that you cover all of the bases. Now, there are 2 different audit methods that you might utilize with this is similar to how professional auditors audit a corporation's books, for instance. The first is, if you're a smaller club and you've got fewer members and transactions throughout the year, you might audit every single transaction that happens in the year. It might be a couple hundred, and it might be doable. If you're a mature club with a lot of members, a lot of transactions, if you're holding complex securities or complex transactions, you could easily have 600, 700, 800 transactions during a year, and reviewing every single one of them could be slightly tedious. And so in that case, you could divide up the audit process so that you say, we're going to audit every single transaction in 4 months out of the year, randomly selected. We're going to check the beginning balances, the ending balances. We're going to check the balances match at the end of, the cash balances, security balances match at the end of the month. In that way, if you find discrepancies, you can dig deeper and figure out the source of those. You could also take a look at random assortments of different types of transactions throughout the year. So again, you can be prudent. If you're unsure, you should audit more of the transactions rather than fewer of the transactions. And whatever you do, always review material transactions. These are larger or more complex transactions. Those should always get special attention to make sure that they've been entered properly. Compare them closely in the club's books, make sure they match the financial statements and the Form 1099s. So no matter what you do, always pay attention to those larger transactions. So the required documents come from a couple of different sources, from your bank and brokerage or financial institutions. If you're using a dividend reinvestment plan, you'll be having trade statements and monthly statements and year-end statements and those Form 1099s if they're available. Those all should be available to the committee. It's important to be able to look at the trade confirmations and make sure that the values on those trade confirmations have been entered correctly. The same thing with the monthly statements, checking the beginning balances and end balances is very important. If you have changed brokerages in the year, you're going to need to have documents from all of your financial institutions. And that is especially important to make sure that everything was transferred correctly. From my iClub, here is a big list of reports that may be useful in the audit. Some are referred specifically in our audit checklist, others are not. And depending on which kinds of transactions you had during the year, maybe you don't require all of these reports, but you should at least be prepared to double check that these reports are accessible. Now, the advantage of using my iClub is that any member of your club can access any report as of any date. And so any member can do this. The treasurer does not have to provide PDFs or printouts of all of these various reports. The committee can actually grab them. And that's an advantage of splitting the work up so that somebody who is working on the member transactions would definitely need the member status report, the member deposits report. Those would be especially useful if you're looking at the cash expenses and income. Then the cash journal report would be useful. If you're looking at securities, the security ledger, the capital gains report, the gain loss report would be very useful. Withdrawals are also something that should be validated and verified as well. Also from the treasury or secretary, there should be receipts for cash expenses, any expenditures that you made. There should be receipts or justifiable, should be easily justified, and make sure that they fit with the club's objectives. From the secretary, the monthly minutes, so that you can verify that the treasurer actually made the trade that the club authorized them to make. And that they fit with what the club members voted on. And the current operating documents and partnership agreement and or bylaws, it's a good idea to review those as well, have those at hand so that you can make sure that the withdrawals were processed correctly using the appropriate methods, for instance. So this is a big list of documents. We understand it, but they all should be pretty readily available from my iClub and from your officers. So before you get too deep into the audit, there are some preliminary tests that we suggest that you do. One is that valuation statements have been created and saved on a consistent interval according to the club's operating agreement. So your club's partnership agreement and or bylaws should stipulate that a valuation is created once a month based on a particular schedule. It might be the last day of the month. It might be the Friday before the club meeting. Whatever that time frame is that your club has determined, there should be one valuation for each month. And my best practice recommendation is that you should have no more than one per month, plus one on December 31st, the year-end statement. Now, I know that some clubs like doing a separate valuation when they're processing withdrawals. I think that can have unintended consequences, and I do not recommend that practice. And you don't need to generate valuations every time someone is withdrawing from the club. That shouldn't be part of your operating procedures. But again, it's your club, and you get to decide how your operations are run, and your operating agreement should stipulate it. The problem also would be that if the club has stipulated how withdrawals and how valuations are created, et cetera, and those stipulations are not being followed, that would be a red flag as well, that there's procedures that need to be improved. So there should be a year-end valuation as of December 31st. It could be instead of your regular monthly December valuation, but we need to have that December 31st valuation in order to close out the books for the year and to prepare the tax return. And then after all, the treasurer has entered everything for the year, there should be an allocation of income and expenses as of 12/31. That gets regenerated if there are any corrections that are made. So you want to make sure that that allocation is current when you're doing the audit. We'll talk more next month about the allocation of income and expenses and why it's important, what it does as part of the closing the books procedures. Making sure that the cash and security balances match. Start with the start of the year. Make sure the balances in the books match what the broker says you have in cash, what the bank says you have in cash. Make sure at the start of the year, the number of shares of securities agree with the financial institution statements. And you're going to do the same thing at the end of the year. Make sure the club's books show the amount of cash that agrees with what the brokerage and/or bank shows. Don't worry about the value of securities, right? Because those prices change. Your broker may have slightly different prices for the same securities at the beginning of the year, the end of the year. Those are not important, those minor differences. What is important is that the number of shares is accurate to the same number of decimal places in both the books and in your brokerage statement. So that's what we talk about, the number of shares, not the value of those shares as of the beginning and end of the year. And then double check that the paid in on the year-end, the 12/31 member status report is different from the paid in plus earnings. That just means that the valuation statement has been done, the unit value is changing, and that the system is working as it should. If they're the same, the paid in and the paid in plus earnings, it's highly unlikely that those numbers would be the same unless you have not done your first allocation of income and expenses as a club. The paid in plus earnings is the amount of capital that the member has contributed to the partnership plus the earnings, and that could be earnings or expenses essentially that are allocated to them, the net of earnings and expenses that are allocated to them at year end, that becomes their responsibility to include on their personal tax return and is reported on their K1. All right, before we get in, let me just look at the questions really quickly here. And I see the team has been addressing those as they come up. Kevin asks, should we do evaluation at the end of the month? Does it matter? Again, whatever your partnership agreement says, there are a lot of clubs that like having, a lot of treasurers that like creating evaluation at the end of the month so that it's more easily reconciled with your brokerage statement. But again, it's fairly trivial to reconcile at a different date if you want to. The overarching rule should be that your valuation should be created as close as is possible to your club meeting date, so that if you're, so that, because what you don't want is during the club meeting, the club is looking at the valuation statement and it's 3 weeks old. That's old news at that point, and that doesn't tell you where the portfolio is currently, and it can make it kind of complicated. If the valuation statement is 3 days old, well, now it's relevant. This is current information. So that's the overarching rule as far as timing goes. But again, your club gets to set that policy there. Bonnie asked to clarify if the year-end valuation is different from the December 31st valuation. Those are the same. You can, the 12/31 year-end valuation refer to the same thing. Kevin says our club does evaluation mid-month for 2025. Should we do them at the end of the month? again, if you're meeting mid-month, then having that valuation done in the middle of the month can be relevant. You wouldn't want to do the valuation after the club meeting. You want to do it before the meeting so you've got that information. Um, but find out what works for your club. Um, Again, 20 years ago, the process of creating a valuation meant typing in the prices of all the stocks using the newspaper, from whatever date it was before the club meeting, the Friday before or something. Today, we have end of day closing prices that are available overnight. So if your meeting is tomorrow on Wednesday night, you could get up Wednesday morning and in theory generate a valuation that would be the most recent information except for the close of market tomorrow. So it would be one day old essentially, and that would give you immediate information. For long-term focused investors though, we don't need to worry about instant, real-time stock prices. Occasionally, there will be a stock that has something happen to it between the time that it's valued on your portfolio and the time of the club meeting. But you take it with a grain of salt, you interpret it, you understand it. All right, let's I see some more questions the team is handling in the back office. I'll get to some more of them a little bit later. Let's talk about now the audit, the actual audit process, auditing different transactions. Using my iClub, a tip, if you're many treasurers may not know about this, and many members I expect don't as well, but you can search for my iClub transactions in the accounting tab. If you go to the summary page, there is a view edit transactions link. There's a basic search and an advanced search there. You can search by all sorts of different things, by transaction date range, so when the transaction, the date on which it was entered as happening, the type, if it's a securities, a cash, or a member. We also preserve the date when a transaction was entered. And that can be useful if you mistype the date and you can't find the transaction. You can say, well, show me all of the transactions that I entered in the month of, October, and you'll see one was entered using a 2014 date instead of 2024. Aha, now you found your problem. It could be you can also try to match amounts or text. So it's a pretty robust search feature. Here's what it looks like on the basic screen. You can, simply say, show me all of the member transactions that happened in this period. And so you'll see in this case a bunch of withdrawals. We can drop that advanced, click the show advanced button or link and get additional criteria there. So this is important if you're searching through and you can't find a transaction or something's not showing up on a report before you re-enter that transaction, or if you want to go back and correct it, you can use this search function to find that transaction, find the range of transactions. So that is a useful tool when you're conducting an audit. So first, we'll take a look at the cash transactions of income type. And money market dividends tend to be a little more complicated because they show up in your brokerage statement as a dividend. The money markets have a ticker symbol, so they get listed as a security. We've been making some changes recently to my iClub where we show money markets that are identified as securities in the cash section of your valuation these days. But it still goes without saying that you can, that these are not entered. Generally, it's fine to enter money market dividends as interest, simple interest, and maintain it as cash. You could also enter it as a money market dividend in the cash section. If you have identified it as a security, it's a little more complicated, then you'll enter it as a money market dividend in the security section. But otherwise, no dividends that you receive from a stock should be listed in the cash section. So that is something to watch out for. You have to enter the stock dividends, security dividends in the security section in order for them to reflect the ex-dividend date and the taxable nature correctly. If you have interest in your brokerage account, if they're showing you interest or a bank account, that would be entered as interest. All the money that's paid in by members are recorded as member deposits, not as cash income. And again, we have seen that where clubs are entering, they think the money is coming in from members, so it must be income, and they process it as an income. That is incorrect. And all the money paid in for members is entered in the member section. And likewise, money that's paid out to members who are withdrawing are recorded as member withdrawals, not as expenses. So it's a little more complicated. I know that you might be making a deposit, you might be writing a check, but these are not income and expense items, so you need to verify that. When you are entering as expenses should be authorized by the club and appropriate and correctly recorded as an investment, investing or non-investing type. Used to be deductible, and let me just correct that real quickly. Non-investing or investing expenses. Used to be, we referred to them as deductible and non-deductible, but since the tax law changes, expenses are no longer, investing expenses are no longer deductible for individual investors, so we refer to them as investing or non-investing expenses. And we're still following the same rules of thumb. What makes an investing expense if it's directly related to the management of the portfolio? So software for club accounting, tax preparation is considered an investing expense. Parties, food, snacks, gifts is all considered non-investing expenses. There should be receipts available for all cash expenses, and expenses should be allocated by the percentage ownership of partners unless otherwise specified in your partnership agreement. So that means you can't simply decide, oh, we're going to allocate this expense by member if your partnership agreement does not stipulate it. And that is following IRS practices and my iClub best practice as well. So that's something to look for. If you're making transfers between your bank, your broker, your direct investment plan or dividend reinvestment plan or other financial institution, those should be cash transfers. Again, some people start thinking that, oh, I'm writing a check to the bank, so that's an expense item, and then you record it as income in the bank where it's being deposited. No, that's not correct. You want to use the transfer transaction for that and make sure that the amounts match in both financial institution accounts and on the brokerage statement. Now, it's a single transaction in my iClub, so the amount should be the same, but you do want to verify that the receiving and sending financial institutions are recording those amounts correctly. In the security section, you'll want to check the corporate actions. Corporate actions is the title of stock splits, mergers, spinoffs. Anytime there are actions that affect the number of shares outstanding, whether you're spinning off companies or they're making an acquisition or the stock is split, those are all kind of fall under the umbrella of corporate actions. For mergers and spinoffs, you want to make sure the basis is adjusted correctly according to an IRS accepted method. This can get a little tricky because those mergers and spinoffs, the IRS doesn't say this is the method to use to determine the cost basis of shares in the new company that you receive when it's being spun off from the parent company. And your broker may use a different method than the company suggests that you use, and that still could be valid. So on my iClub in the support section, Russell Malley does a great job at writing up instructions for all of those spinoffs and merger transactions and how to enter them correctly and does the research so that you don't have to. So just because the basis doesn't match your broker spun off shares doesn't mean it's incorrect, but it does mean that you want to make sure that you can verify that you've done it correctly in a method that the IRS will accept when you eventually sell those shares. And this is all based in the accounting rules that say that when you receive shares in a spinoff of a new company, part of your original investment in the parent company comes with those new shares, so those new shares have a basis. A lot of people assume that when they're getting a spinoff from a stock that they own, that it's free money, right? It's free shares. The basis is zero, and that's incorrect. There is a basis that follows those shares from the parent to the NewCo. So you need to make sure that that the treasurer didn't just make up the numbers or didn't entered zero as the basis for the spun off shares, because that would be incorrect. For all the buys and sells in the security section, you want to make sure that they match the trade confirmations and the brokerage statements. You want to check that the acquisition and sale dates are entered correctly and that the cost basis, the gain loss of sold securities is all matching all the different reports. The dates that you buy and sell can be important in determining the disposition of capital gains. If you were to sell within a year, those gains will be taxed at short-term capital gains rates, and if you hold it for more than a year, they're at long-term rates. And if you mess up the purchase date or the sale date, you could affect how the gains are reported, and they would be inaccurate. So it's important to make sure that you get those right. If you were selling specific lots, you want to make sure that the lots that the broker sold match what was recorded in my iClub. Now the default is first in, first out for stocks, and so if you didn't specify specific lots when you made the sell at the broker, you can't go back later and say, oh no, we meant to sell these instead. You've got to follow that first in, first out the broker uses if they do not have instructions to the contrary. If you've got securities that have been completely sold, you want to make sure that there are no fractional shares. You can find that on the individual security ledger. Sometimes these show up on the valuation, these little ghost fragments of 0.00004 shares of stock. Often that's because of there was an error when the final sale was entered. If you've got fractional shares and dividend reinvestment plans or dividend reinvestment at a brokerage, and you type in the number of shares instead of using the sell all link on the sell transaction, sometimes you are rounding differently your broker than the books, and so you end up with these leftover fragments of shares. So that'll show up on the individual security ledger if you don't see it on the valuation statement, and that's a clue to fix that particular problem, because it will not go away by itself. On the dividend section, you want to make sure that all the security dividends are assigned to the proper security. They're not entered as cash transactions. They're entered in the security section, and they have the correct ex-dividend dates. It's a good idea to double check those ex-dividend dates, again, because if when you sell the shares around those ex-dividend dates, the taxable disposition of those dividends changes. So you want to make sure that it's accurate and that your books will match what your broker is going to eventually report to the IRS. Though it also happens where sometimes you select the wrong security and you type in you apply the dividend to the wrong security. That happens sometimes. Sometimes you might miss one quarter's dividends for a particular company. This transaction summary report will show that easily if you look at the you can get that subtotaled by security, and that will just help make sure that you've got all of the dividends covered and the amounts are all matching, and then also match what the broker's reporting on the form 1099. In the member section, member payments, these are the payments that members are making to purchase units each month. You want to double check as you go through the valuation statements that it's changing from month to month. That means the prices have been updated correctly. The member payments are properly credited to the paying members. That's happened, that happens as well, where the wrong member gets credited with someone else's member payments. And so that can be a problem. It can be that somebody missed a meeting, so the next month they've got a double payment and they only get credited for a single payment. You want to make sure that all the members who are contributing the same amount in any month are credited with the same number of units, and that all those member payments are eventually deposited in the brokerage and bank account. So otherwise, the summary of a month's member payments matches the deposit that's been made into your brokerage or bank account. For fees, fees should only be assessed in accordance with the club operating documents. Our best practice recommendation is that you only use fees for penalty situations like late fees and not to recoup expenses. So don't charge members fees to pay for expenses, whether that's your monthly Google fee. I see Kevin in the comments asked about that. We don't it's all the same to the member. So just, take the charge out of the kitty or have everyone contribute an additional amount, a higher amount as a member payment instead of making it a fee. The fees and expenses, rather the expenses of the club should be related to the club portfolio, and you shouldn't try levying them against individual members. If it doesn't benefit the entire club, then there's probably not a good reason to have it be part of the club's operations. So that's our approach. Keep things simple. If you've got an expense, then the club pays it. If it's if it's based on the total number of members, that's great. If it's a flat fee, that's great. It all comes out of the same place. So don't make things extra complicated by levying an additional fee on top of the member payments. Payments that are transactions that are recorded as fees should be penalties or late fees, reimbursement for a balanced check charge, for instance. Those would be member fees that we would consider to be reasonable. Otherwise, if you're trying to recoup expenses, it's not the right approach. Expenses come out of the general club kitty, if you will. For withdrawals, you want to make sure that first and foremost that the withdrawals are processed in a timely fashion and according to provisions in the club operating documents, which is to say, if the club says that we're going to, after the receipt of the withdrawal request, at the next meeting, we value the withdrawal, and then within 30 days, we pay it out, that's what you do. And if you are doing something else that's not stipulated, or if you're dragging your feet, or if the club is making decisions that no, this time we're not going to follow our procedures, that is vastly unfair, and that should be acknowledged in your audit. For each full or partial withdrawal, the valuation statement should reflect the number of shares of securities if they were transferred to members. So from month to month, you should see the number goes down. Withdrawal fees and cash values should be calculated and paid properly. And again, as with fully sold securities, you should have no fractional units left once members fully withdraw on the member unit ledger. And again, sometimes you have these ghost units, fractions of units that remain after a member withdraws. If you find those, you need to redo that final withdrawal transaction in order to clear that up. Often that's because something changes. You process the withdrawal, then you go back and you change the transaction. Now, the number of units that member was taking out of the club goes up or down, but you already paid them out, so there's still a fragment there that needs to be reconciled. All right, so before we talk about finalizing the audit, let's take a look now and see the uh, Jimmy says, if the club meets a second time each month for education and other reasons, is there an issue with creating a second evaluation prior to that meeting, then deleting it after the meeting is over? Um, if that's what you're doing, um, and you are sure that you're going to delete the valuation, I think that's fine. We do have a project on the on the back burner that we were looking at on the accounting page, the summary page, kind of doing a temporary unofficial valuation that would cover situations like this. And your club seems to be a good use case for that particular feature. The reason I don't particularly like the practice is because if you forget to delete that second valuation or you delete the wrong valuation, you can have a lot of unintended consequences. You can have the next month's deposits all go in at the wrong unit value, for instance, and generally they're not going to be significant changes, but if the market makes a big direction one way or the other, or if the members have an impression based on that second valuation, uh, and then the market, does a big move up or big move down, then you're kind of doing a disservice. So it's not a practice that I like, but if you are sure and confident that you're handling it correctly, then I wouldn't be opposed. I wouldn't be. It's not the worst thing in the world, we'll say. So but in the audit, if you're turning up that, oh, there's two statements in March, that's something that I think you would want to correct. Jody says that hopefully this year's audit recommends specific reports to help new users have specific reports to run and use for the audit. And yes, we have specific reports that we have in a big list that we pulled out. I realize and recognize that perhaps this presentation and the audit checklist would be more useful if we were even more specific about it, but we moved in that direction. So I think hopefully it'll be more useful this year, and we'd appreciate more feedback about that particular topic. All right, let's talk about finalizing the audit. After you've gone through all of these reports and you've gone through all of the transactions and everything looks good, that's great. If there are errors, if there are deviations from best practices, again, our YouTube channel has a whole lot of webinar replays that you can watch that talk about best practices, that talk about monthly tasks, talk about problems to look out for. If you're having uh, trouble with doing the job of treasurer, that can be a good resource to check out those past webinars where we really dive into each of the topics. If there are errors, those get reported to the club treasurer to correct them, and then ideally someone from the committee would review them and make sure that those changes have been made, the errors have been corrected, that the year-end valuation and the allocation have been regenerated, and that you're good to go with your tax return. The committee should also feel free to make recommendations about better procedures. One of my big focuses with investment club treasurers and investment club accounting is to keep things simple. And too often clubs just get wound up in all sorts of complicated procedures. They want to be fair, so they're trying to enforce things that really, if you just eased up a little bit, it would make the treasurer's job a lot easier. The treasurer is not a bill collector. The treasurer shouldn't have to dun members to get them to pay their dues. If members aren't contributing, they're the ones who are missing out on the opportunity. So they don't need to be penalized if they miss a meeting, if they're late. They're penalizing themselves. And once you start looking at it from that prism, that lens, then the job of treasurer becomes a lot easier. Once you say, oh, you know what, reinvested dividends are really making things complicated. Let's make it more simple by not reinvesting dividends, just entering the dividends in the program, using that cash the next time we buy securities. having member fees. If you're collecting member fees from 15 members every month, that means you've got 90 extra transactions in the course of a year that you probably don't need. That the benefit of having them as fees is way outweighed by the additional complexity that you're creating for the treasurer and for the audit committee. So keep things simple. That's the mantra that I believe you should be following. The last page of the audit checklist is the annual verification report that all the members should sign. That goes into the club's records. You can scan it as a PDF if you want and store it in your file storage area. Gets submitted to the club, gets reported out at the next club meeting. And always say thanks to your club treasurers, all of you who are here. I know your club treasurers or your club members appreciate the work that you do, even though they may not always express it, but we certainly are grateful for all of the hard work that you do, and your investment committee should make an effort, or your audit committee, in other words, should make an effort to thank the treasurer for another year of service to the club. So let me just double check the questions before we wrap up. Thanks again, Treva, Russell, and Sean, for the work that you're doing in the back office. Bonnie seconds the motion to have a temporary valuation. She keeps a spreadsheet outside of my iClub, so we will definitely keep that in mind. We're on lockdown now with my iClub until the tax season is over, so we won't be introducing any new features at least until we get through the tax season. So, but we will take a look at that and maybe bump it up to the list. If you're not using my iClub, Stuart wants to know, is the checklist reasonable or can be used? Yeah, if you're not using my iClub, the checklist may be useful. Certainly some of the report names may be different. So the procedures may be different. We have a particular approach based on 20 years, 30 years of doing this. So we have an idea of what works that maybe doesn't jive with how you're doing your books right now. But I think the principles are still pretty valid and useful for anybody to follow. Well,
Doug,
if you do have any, yes, go ahead, Russell.
We got a question that went to me via the chat, so and not in the questions box. That's from William asking, regarding month-end statements and the lag before a meeting, why not just do regular month-end report and then print the current dates, my iClub valuation, and give a copy to all members? My problem with that, you're adding more work to the treasurer, and it's kind of getting away from simplifying things. So
yeah, again, simplicity. We certainly know club treasurers who are happy and have the time and the resources to provide all sorts of supplemental information. I mean, that's great. But we also know that after you've been doing it for a long time, you want to keep things as straightforward. And the more complexity you introduce into the job, the greater the risk that you're going to have something that doesn't go wrong, right? You're going to create that extra valuation. Then you're going to forget about deleting it. Then you're going to process a withdrawal. Then you're going to realize the withdrawal was based on the wrong valuation, but now you've already paid out the money and it was more than the member should have gotten. And so now you've got to accommodate this, this extra outflow of cash. And right, so the simpler you can keep it, the easier those types of transactions are going to be and are not going to provide problems in the future. Kevin says, is there a webinar on the valuation process and procedure? That's a good question. We do cover it in the monthly Club Treasurer Checklist webinar that we did just a couple of months ago. So you might take a look there. I don't know how deeply we went into it, and we probably also covered it in our best practices webinar, which is another one in the archive where we try to set people on a course that will keep things accurate, straightforward, simple, easy to accomplish, not overly complex. And so we do address some of those topics about the valuation that I talked about tonight, keeping that valuation close to the meeting date, only doing once a month, and then not creating extra ones for withdrawals, things that I believe, again, are adding that complexity. All right, with that, here's my email. Feel free to reach out if you do have comments or suggestions. We want to thank you again for joining with us. Next month, we'll look at closing the books at year end. And then in January, we'll be looking at preparing the club taxes. We do have changes this year for the federal club tax program, as well as the state. So as they impact larger clubs and as they impact clubs that file in multiple states. So we'll be talking about that next month. We'll give you an update. Watch your email in the next week or two for our 2024 club tax guide that we send out to all my iClub users that will outline the basics that treasurers and members need to know about federal and state tax filing requirements for investing partnerships, including investment clubs, and how we can help with the process of filing those returns. So watch your email inbox for that coming up soon, and we'll be expecting to launch the 2024 club tax modules for sale in the next week or two as well. So once again, we'll look forward to seeing you next month. Thanks for joining us at this month's My iClub Investment Club webinar.